Salam, everybody. This is Investor Shake back at it again with another video. And today's Halal stock pick of the week is Lyft, ticker symbol LYFT. Now, I previously talked about Lyft's rival Uber in another video, which you can check out. But this time I'm making an entire video dedicated to Lyft. And a description of Lyft is that it engages in the provision and management of online social rideshare community platform. It provides access to a network of shared bikes and scooters for shorter rides and first mile and last mile legs of multimodal trips, information about nearby public transit routes, and Lyft rentals to offer riders a view of transportation options when planning any trip. And this company was founded in 2007. So basically, Lyft is a rideshare company, and they are also known for operating a network of bike share programs all over the country in major cities such as Washington, D.C., New York, Chicago, San Francisco, etc. If you've seen those bike share programs like the City Bike in New York or Divvy in Chicago, those are operated by Lyft. It was originally owned by another company, but Lyft acquired that company because that's what companies with large valuations do, is they acquire smaller companies and build onto their brand. So the bike share and the scooter program is one of the ways that Lyft distinguishes itself from Uber, because everyone sees them as rideshare companies. The people who drive the cars, they work for both Uber and Lyft. They can switch between both apps. So quite honestly, they're both pretty much the same because everyone mentions both of them in the same sentence. Or do you do Uber and Lyft, or you want to grab an Uber or a Lyft, or etc. So the shared bike program is very interesting. As an avid cyclist myself, I really like the bike share program. It allows you to get around the city. Only problem is the bikes are pretty slow compared to a regular lighter bike. But recently they came up with these electric bikes. I'll show you. So this is one of the new e-bikes that have been introduced in the Chicago bike share program. It does have an electric motor in the front wheel, and it does have a battery pack that is on the frame. And these bikes go 15 miles per hour as their max speed. So this will be a viable option to get to work without breaking a single sweat. So that can be a game changer for those that don't want to take the bus to work or don't want to drive. They are providing an alternative mode of transport to commute. And this only makes sense for big cities. If you live in an area that is pretty spread out, you will definitely need a car to get to places. Like if you live in a rural area, this defeats the purpose, but this mainly appeals to urban areas. So looking at the stock price, Lyft has had a pretty big jump recently. For much of October, it was in the 20s, and later that month, it dipped in the low 20s. So I was able to grab some shares around the $23, $24 price. And then once November hit, it just shot up back to high 30s, which is pretty good because I believe they did well in their quarterly earnings. But however, if you were to look at the year, it hasn't been good for the stock. So they started out as an IPO in 2019, and they were as high as $70 a share, like 70, no, 88.60. That it was the highest that Lyft stock has ever been, and that was when they had their IPO. And since then, it has been on a long-term decline. So you see, it's companies like Lyft that should warn you to not buy a stock at the IPO price. They start off with a pretty high valuation, but then soon enough they start to realize that the valuation may be a bit too high, and it will lead to a decline over time. So it has been in the 30s and 20s for quite a while. In this year in particular, it started off in the 40s, but due to the pandemic, we've dipped to the 20s for much of 2020. Looking at the financials, Lyft has been experiencing increasing revenues year after year, yet they are still experiencing negative earnings in 4 consecutive years. And then when you look at the quarterly data, we're showing the 2020 performance. They've had positive revenue, but they have been maintaining this negative earnings. So looking at Q3, what led to the increased price was the fact that they actually beat earnings just slightly. Every quarter, analysts typically have an estimate of how the company would do, and if the company exceeds that would be good for the stock. And if not, then we typically see the stock dip below, like we've seen with Slack, for example. But for Lyft, they have been given some good news, so that has led to the price going up. And then analysts are saying that it's a buy with an average price target of $43 per share. And really one of the main issues with Lyft is to achieve profitability. As you can see in the income statement, they are currently experiencing a negative net income at around 1.6 billion, which is going to take a while for this company to reach profitability. And looking at the balance sheet, and this is based on 2019 data, they currently have 5.6 billion in assets and 2.8 billion in liabilities. And then looking at the market cap, Lyft currently has a market cap of almost $12 billion. So compared with Uber, Lyft is significantly smaller in terms of their valuation. And if you were to look at their stock price when they first IPO'd, they were in the high 70s and low 80s. And you have to ask yourself, what will it take for Lyft to achieve those levels again? Because right now the stock is basically half of what it was during the IPO. And it makes you wonder. So right now, Lyft is actually considering getting into the food delivery space. According to this article, Lyft is focusing on the problems that arise with the existing food delivery apps such as Uber Eats and DoorDash. And what they say here is what's happening to restaurants in the time like this, when they sell food on a platform like Uber Eats, they get charged 20 to 30%. They lose 20 to 30% of their revenue to that platform. And that is a concern with a lot of these food delivery companies. And Lyft is currently brainstorming ideas of how to mitigate this and to try to distinguish itself from its competitors if they choose to get into this space. So that's one of the things that Lyft is looking forward to in the long term. Again, the stock has been beaten down this year due to the pandemic, and as well as some issues with California about Lyft drivers being independent contractors or employees, and all that can put a strain into the company. So when we're looking at 2021 and beyond, you need to figure out, can Lyft be able to resolve some of the issues that they're experiencing while still focusing on expanding their brand? I mean, we've seen them make contracts with large cities with the bike share programs and the scooters. And then Lyft also is working with transportation agencies to create a, what's it called? They're creating a transit app so you can see when the bus or train is going to come, which is useful if you live in a big city that uses a transportation network with buses and trains. So yeah, you see Lyft is taking that approach, and they're really trying to find a way to distinguish themselves from Uber, because everyone is treating them like they are the same. So yeah, you really have to think about this before putting your money into a company like Lyft. In terms of the price that I would buy shares at, it would definitely be in the 20s. I have been buying shares in the 20s, and I am currently holding on to my Lyft shares. So I don't want to say that it's overvalued, because I don't know if the stock is going to go a lot higher than $37. So with that being said, I am long on Lyft, but I'm not currently buying any more shares after that big surge in the price. So I'm long on Lyft, and I would suggest getting shares at around the 20s if they were to drop back at that level. I don't know if they will. And as always, I'm not a financial advisor. Please don't buy Lyft shares because I'm talking about it. Do your research, and if you believe in the company long term, consider building a position. This is Investor Shake, checking out.